Hello and a warm welcome to Talking Stocks. I am Gugulethu Cele. In studio with me is Peter Armitage and Bryan, both from Anchor Capital. Now today we're talking Amazon, the online retailer of books, movies, music and games, along with electronics, toys, apparel, sports, tools, groceries and general home and garden items. Gentlemen, good to have you both. I think there isn't anything that we've excluded from that list when it comes to Amazon. But fundamentally, that's not where the roots of the company actually started, if I'm not mistaken. It was more an online retailer for books. Peter?
Yeah, it started off as a book retailer, and I think they had phenomenal success. They then started selling books digitally. And there's always, part of the discussion we'll have is about selling physical product versus digital product. And obviously the leader in the digital space is a business that's still at embryonic stages. But they've got the trust of the American consumer, and then more recently the global consumer, and becoming a place where they can sell virtually anything that a consumer's dishing out money for.
Perhaps if we can get just a few highlights of this company, because I understand eBay was also strong competition for it in the initial stages, but that seems to have faded away.
It's, Amazon one step back was a marketplace. They tried to bring a third-party seller, be the middleman. Then they decided, no, you know what, we'll get the product, we'll sell it on, and we'll get it to the client as fast as we can. eBay maintained this position as a marketplace. They just wanted to be the middleman. They haven't gone much past that. Amazon really just took this and said, okay, right, you want it, we can get it to you, and we'll get it to you quickly and efficiently at a very low price. And his theory has always been, let's get the market, let's get the consumer, the money we'll make later. So he literally blew past eBay quite aggressively, and now is taking on the world with this model.
I think there's one line that always sticks in my head. Jeff Bezos, the founder of Amazon, is famous for saying, your margin is my opportunity. Yeah. So they're basically saying, you making 20 Rand out of selling something, I'm prepared to only make 5 Rand, and build up a base. And once you own the customer, you can bury everybody else in terms of critical mass and price. And once you've got the customer, start edging up the margin as you go forward. And that's why you land up with a company with this huge big PE multiple, and it scares the hell out of everybody other than growth investors. And I think comparing it to Walmart kind of starts to put things in context.
Walk us through that concept as well as some of the metrics there. That PE that you mentioned is quite expensive, and in comparison to some of its other global peers.
So Walmart is the biggest retailer in the world, and they're sitting with about $500 billion of revenue, okay, to put it in context. And they're sitting with a market capitalization, so a value of their business of about $200 billion. But they're a mature business, they're closing down stores, their revenue's under pressure. Obviously people like Amazon are starting to nibble at the edges. So Amazon, if you put it in context, is about $100 billion of revenue. So it's about 20% the size from a sales point of view, but and it's still at the stage where it's investing and spending huge amounts of money on new products and new ideas, and we'll talk about some of their new products going forward. So in Walmart, the maximum profit's flowing down to the bottom line, and they're sitting at about a 13 PE. That's $200 billion. Amazon's value is $270 billion, but the bottom line is still almost largely irrelevant. They're sitting on a PE of hundreds. But their turnover is 1/5 of what Walmart's is. Okay, so and the other big difference, of course, is Walmart is largely an American business. If they want to go around the world, they have to buy new stores, whereas Amazon, with their infrastructure, can largely service the whole world. So, what the people who are excited and believe in technology and the growth of something like an Amazon, you're effectively sitting going, well, it's quite conceivable that Amazon's turnover could be bigger than Walmart's if you take a reasonable time period, whether that be 5 years or 10 years. So you're paying about 20% more. The value of the business of Amazon is 20% more, but it's at a very different stage of its life cycle. So any kind of value investors going, this is absolutely insane. And the people who if you want to buy a stake into the future, you have to be able to extrapolate with some confidence. And for us, Amazon's become a stronger and stronger business. It's developed more and more product. And we think that over time, if you put a 10% margin in Amazon in 10 years' time, it's dirt cheap right now.
Sure.
But you have to take a view that it's going to own the future and continue with some pretty aggressive growth rates.
Bryan, your views on this, together with the geographic split, because it does have quite a strong footprint in North America.
I mean, Amazon started out life as a US business, and they've been aggressively growing this international space. So they've added more distributions, they've added more streams, they've gone into more countries with additional products. So it's becoming more and more of a equitable split between what is happening in the US, what is happening in the rest of the world. And now all of a sudden they've started disclosing AWS, which is Amazon Web Services, which is their cloud computing, their cloud base. So if we take this back 10 years, that pie chart would have looked dramatically different. International would have been a fraction of what it is now, and they wouldn't have had the web services. So this company is growing. And that's quite a nice thing that Pete was alluding to Walmart. Walmart's revenues are ticking up probably low single digits, mid single digits,
sure,
but aggressively maybe a low double. These guys are growing quite aggressively, and the top line is actually is opening up quite nicely. They run great gross profit margins, and even on the earnings margin, that's slowly starting to tick out. In the last quarter, we saw it at 3.5%. Doesn't sound much, but it's their second highest quarterly margin in history. So they are starting to grow this margin. So yeah, we think it's a great business, expanding, growing, and the revenues are coming and the earnings are coming.
Is it sustainable though, if you look at that graph on screen, together with the ongoing pressures on consumers globally and upcoming trends with e-commerce competition really stiffening up?
Well, they've got the power.
Yes.
If you've got the critical mass, your fixed costs are spread across the 100 million consumers, as opposed to no new player can start up and really compete with them. So it's the gross margin's absolutely sustainable. We think they're causing the pressure. They are the people who are putting pressure on everybody else's prices, and should theoretically be cheaper than everybody else. So it's really they'll gradually make a decision to give up a bit more of that margin and to make more money, which is really a decision at a point in time.
Well, that's the thing is, Amazon has established themselves as the market leader on a global basis here. So anybody who wants to enter into the space, you might be able to set up a little shop here or there. We saw the local competition where we had two similar providers.
Yes.
Consolidate into one. This is not an easy business to play in. So they've got the scale, they've got the scope, and they've got the client base and the eyeballs. It was a statistic that I got from a colleague of mine that 60% of online consumers will go to Amazon first to check a price versus 11% that go to Google. So this is becoming the place where people want to go. They go here to go and find online shopping. They go here to go and compare. Somebody to take that lunch away, I think, is going to be extremely difficult.
But it is the future. My kids' last 4 birthday presents, we've ordered stuff off Amazon.
Yeah.
So the new generation coming through,
that's
it goes without saying. People will start shopping much more and more online. But they're also providing a lot more services and products and getting into other areas. So there's a lot more margin.
Let's talk about that. I think I recall they tried to release a Kindle one time. I'm not too sure how successful that was. And in future, I understand that drones might be delivering items to consumers' doors. So
Amazon has tried everything, and they continue to try everything. They're very, very innovative. Jeff Bezos is unbelievably innovative when it comes to that. The Kindle is still around. The Kindle's still probably one of the strongest dedicated e-readers, quite a big following. They've tried to go in the tablet space, and they've now released another 4 products in that tablet space of different sizes, speed, strengths, etc., trying to take on the iPad or the Samsung. How that features, they haven't been all that successful previously. They've had the phone, the Amazon Fire phone, hasn't really worked that well. The TV box hasn't really worked that well, trying to compete with the Apple TV. But these are areas where he continues to advance. So he goes, okay, right, well, that didn't work. Take that away, write it off. Let's go with the next one. Let's get to the next generation. Let's advance this aggressively. And then let's bring in other services. So we have Amazon Prime. Amazon Prime started as a delivery service. So you went and paid an annual subscription, and for that annual subscription, you got preferential delivery. So you got 2-day delivery maximum on anything you wanted, otherwise within even 24 hours. Now, as part of that Prime service, you get online streaming of TV programs.
So they're competing with Netflix.
With Netflix.
Sure.
So Netflix's biggest competitor.
You're getting online music, competing with Apple Music and Google Music. All these services are now being brought in. You're also getting preferential distribution in certain areas where you can get your product in 2 hours. They've got over 17,000 products they'll deliver in under an hour or 2. So grocery, and that all forms part of Prime now. So Prime is becoming a big service on its own that people are really embracing, because I think it's $100 a year.
Exactly.
and you get all this.
I think to put it in context, there's 4 or 5 companies around the world that are changing the world on the internet and own that space. And they've now got to sizes where they've got the cash flow to try anything, to buy up a serious competitor. So, the dream in Silicon Valley is you come up with a new IT idea and one of Facebook or Amazon or Google buy your business. The ticket price is $1 billion for a good idea. But the point that I'm making is if you take Amazon, Facebook, Google, Tencent, and Baidu, those are basically the 5 people who own the future of the internet. And we think you want to be invested in that space. You have to pay for quite a bit of the future, but we're confident it is the future. So in a portfolio, you want exposure to one of those. You've got to kind of work out the value equation across those businesses and make a call on who's doing things right and who's making the headway.
Exactly. Buying into the future. Well, let's find out from our experts now whether time to buy, hold, or sell Amazon as a stock. Bryan, let's start off with you. Buy, hold, or sell Amazon?
I like Amazon. I think it's a buy. I think it should form part of a portfolio. I think there's great opportunities within the business. There's great innovation within the business. And recent market movements have kind of given you a slightly better entry price into it. So I'm definitely a buyer of Amazon.
Pete, I take it you agree.
Yeah, you have to bear in mind it's a risky share because it's expensive and extrapolating into the future. In a market crash, a share like Amazon would probably come down more than the average. But that, it's relatively unimpacted by global economic growth. It's more about secular growth in the internet trend and the services they're offering. So if it came off, we'd always view that as an additional buying opportunity.
I'm glad you mentioned the global economic factors, because we do know that at the moment emerging markets are slightly out of favor and the exposure to India is also costing them slightly. But is this perhaps a loss that can be offset by the exposure to more advanced economies and Northern America, as we highlighted? So
yeah, I think with those 5 businesses, where the economic growth is 1% or 3% is not one of the key 2 or 3 drivers. It obviously has an impact, but ultimately it's a secular trend where we're going to go from 10% of global retail being, or 5% of global retail being online, and then I'm including services, to 50% over 20 years. And it's not economic growth that does that. It's a change in people's behavior and what technology can offer.
Exactly. Well, we'll leave it on that note. Buying into the future, as you've mentioned, little Kate, and I forgot your daughter's name now, but
Sarah.
Sarah, there we go. I can't forget the letter that you wrote her once on investment opportunities. Little Sarah and many of her peers as well will be buying into the future, are using online platforms. Well, that's where we leave it for today. A big thank you to both my guests, Peter Armitage and Bryan Rudd, both from Anchor Capital. Do catch us again next time when we talk more stocks.